Hey, what's up, Crypto Army? I'm Travis, your crypto newbie. Bringing you my experiences. You have to learn things the hard way. Just a reminder, I'm not a financial advisor, and none of my content should be viewed as financial advice. So today we're going to talk about the crypto J curve. I mentioned this on an AMA over the last couple of days that I was going to be putting this out, and today's that day. So we're going to talk a little bit about the crypto J curve, and then we're going to talk a little bit about how can you as an investor use the crypto J curve to your advantage. I'm also going to talk about some of the potential disadvantages or some of the things that can go wrong if you use this strategy. So just keep in mind that there's no for sure approach to anything in crypto. And I'll use some examples to show that as well. So let's go ahead and take a look at the crypto J curve. What are we talking about? So this is the crypto J curve. And let's go through this and digest this, right? So you had three stages: stage 1, stage 2, and stage 3. During the first stage is when you launch your token. You have the ICO, there's a whole bunch of hype, there's a whole bunch of community building. Everybody's really excited about the future of this crypto. You get your speculators in there. You're going to have some profit takers. Everybody's seeing the launches and there's sell-offs, and the token has no utility. It's the promise of what's to come that builds all that hype into the launch. So you see this huge increase, and it can be a big increase, it could be a small increase. That's the area you got to be kind of concerned about, is you don't know where this point is. You don't know where it's going to turn and start going down into this area, which is your stage 2 area. The enthusiasm phase. Product launches are pending. You're hearing about utility updates. You're maybe getting some screen captures of what it's going to look like. All the media moves on. Some of your bigger investors have moved on. The price is dropping. The token's still trying to build up holders. It's still trying to get some people to invest. You're still doing some buys and sells. But the developers are building during this stage. And as you can see, the target J curve buying period is in this area here. Sort of. Let's keep going through this and then I'll explain. Then you go into the stage 3, and this is where you launch utility. Utilities are finally coming online. This length of time could be really short, could be really long. If it's a game development, it could be years. Blockchains are kind of the same thing. Look at Bitcoin as a great example. It really didn't take off until right around 2018. And it's had some ups and downs over the years, but it spent a lot of time at a pretty low price. Most of your blockchains have that exact same J curve. Dogecoin is another example. Numerous years, I think it launched in 2014. It really wasn't until 2020, 2021, where it really kind of took off and got to where it is now. So it spent a lot of years down here. And to be fair, Dogecoin really didn't do anything until Elon Musk got involved, but that's a whole different thing. But you get into this stage over here, and that's when you're doing those launches of the utility, and you start to see that price jump. And sometimes it just keeps going up like this indicates, but a lot of times you've got some ups and downs and ups and downs, and over time it keeps going up, but it does have some downs in between. So that is the crypto J curve. Now, what are some buying strategies for this? And I should probably throw in here, usually right around here, there's a huge jump up and a huge drop off, because again, you buy the rumor and sell the news. So you're going to see sometimes that you've got these huge jump ups and these sell-offs that immediately follow, followed by the J curve. So when you see that, don't necessarily get worried. Again, we've talked a little bit about that on previous videos, and if you want, I can do another update on what that is and what that looks like. But for the most part, this is generally, when you zoom out over the course of years, what the J curve is going to look like. But again, how can you maximize this for investment purposes? Now, according to this, this is your target buying area. This is where you want to get in on the project. It's somewhere down here, you invest a little bit, and then you wait that 5 to 8 years that I'm always talking about to get to here. That's a great strategy. But your money's just sitting there not really doing anything, because you don't know exactly when the utility is going to take off and when this is going to happen. Sometimes you launch the utility and this doesn't immediately happen. It's not like all of a sudden somebody snaps their fingers and all of a sudden the price starts going up. Although a lot of times with some utility launch, you do see that. That's not always the case either. So you're kind of investing in the potential of the project when you buy down here. So just keep that in mind. And I say this all the time in my videos. A lot of what I talk about is in reference to a J-curve. Even though I don't necessarily mention it throughout the course of the videos, this is what I'm talking about when I say 5 to 8 years, because sometimes it takes a while for the utility to be developed, especially when you're talking about games. For blockchains, it's kind of the same thing. It can take a while before you see these kinds of an increase, and you're probably going to see some dips along the road getting there. So that's one strategy, is you buy down here because maybe you missed this. Another strategy, and this is why we've been doing a couple more launches and taking a look at projects before they launch, is because if you can buy here and you know that this is generally how things go, if you can predict when you're going to get to here, it's a great opportunity to sell. And then you rebuy here and take some profits. So that can be a great strategy. Just keep in mind, sometimes you don't see this. Sometimes it doesn't look like this. Sometimes you sell thinking that it's reached the top and then all of a sudden it just keeps going up. So there's some real big drawbacks to this approach. That's why I didn't want to necessarily jump into this strategy, because if you sell thinking that here is as far as it's going to get, that's as high as it's going to go, and then all of a sudden it's up here, you're kind of kicking yourself. So in my opinion, the best time is probably to sell right around here when you're confident that you reached the top and you're on your way down waiting for that utility, because usually you start to see the enthusiasm fade, and this is usually what follows next. Now, what does this look like on a chart? So let's look at the sandbox. Now, again, this is a J-curve. It goes up, it goes down, and then it goes up. And right around November, that's when the sandbox alpha version of the game went live. So you can see significant increase in price when the utility came online. Now, looking at it, this doesn't seem like it's a huge increase, right? But you're at 0.67 when down here, you're at 0.05. If you're at 0.05 and you're waiting and it's 0.05 for days, a nickel for days, and then all of a sudden you're up at 67 cents, it looks like it's skyrocketed from that vantage point. But when you're looking at it zoomed out like this, it looks like it's just a small blip on the chart. In comparison to $8 or $7.50 up here, that's a pretty big difference. But that's where they say sometimes it's better to buy over here if you can get to the left of that J-curve before people start getting into it. Sell up here when it hits 72, 76 cents, and then rebuy down here. But as you can see, it didn't go down that much. Between April and November, there wasn't that much of a dip. So there's the risk. If you sell up here thinking, okay, the enthusiasm is starting to go, the next time you buy in, you might actually be buying in at a higher price. So that can backfire. But this is still a J-curve. There is a little bit of a dip. Not as much as you'd expect, especially for a game platform. Normally there's a much more pronounced drop in price, but the sandbox was already kind of a game, so there's advantages in that particular ecosystem on how they did things. Now here's another better example. So here's Cardano. So Cardano launches, has a lot of enthusiasm, price skyrockets, and then you have that waiting for adoption, waiting for people to start using Cardano, and you're waiting for years for ADA to actually do anything, and then you start seeing these massive jumps. Now we're on a pretty significant drop right now, but there's a reason why I haven't covered Cardano on my channel. It's an interesting blockchain. Most of the stuff that's been launching on Cardano has been paid for by Cardano, so there hasn't been a lot of mass adoption. That's why I haven't really talked about it much on my channel, because I kind of figured this was going to happen. But I'm getting off topic, so this is a more traditional version of a J-curve. It's a really good example. Now what about Bitcoin? Now Bitcoin, a lot longer, but it's got a J-curve. It's got a really, in comparison to 60,000 or whatever the top was over here, 61,000, a couple $100, kind of small blip. But if you back up even further, $90, $80, so a couple $100 is a significant increase back here. But then you've got years before you see that first real big jump, where we're talking 16,000. So if you were down here, you spent a lot of years holding on to Bitcoin, waiting for this to happen. and you spent even longer waiting for these to happen. So this is kind of how J-curves work. Now here's an interesting one, and it's kind of a cautionary tale. I first covered Evergrow coin right back here. It was right around the 16th or 17th of October. Price was right around 28 or 29, I think, when I covered it. Right around here is when the price was. So by the logic of the J-curve, I covered it after its high because it was about 48 here. And this is actually what I remember saying in the video is I wasn't sure if it was going to continue to go down or if it was going to continue to go back up, but I was trying to pick the right point to cover this project. This kind of looks like that first tip on the J-curve, right? But look what happened. It skyrocketed up here. And then it dropped pretty significantly until right around January. And if you've been following Evergrow coin, then you know what happened in January was they were supposed to have Crater and NFT Marketplace and everything else. So all that hype kind of pushed the price back up and it didn't happen. So the price continued to go down. But this is an interesting J-curve because it's basically showing the exact same J-curve. And if you remember, back in October, November timeframe was when the hype about the exchanges was there. So that was big. A lot of investors like the idea of the tokenomics working on exchanges. So it drove the price higher and higher. And then the NFT Marketplace and Crater was a week away, at least back then. And you see the price continue to skyrocket. So this is what happens when you have a lot of hype that drives the price up. But again, the enthusiasm never really dropped. There's a little bit of an enthusiasm drop back here until one of the AMAs where they talked about the exchanges and tokenomics and NFT Marketplace and the potential of Crater, and then it's a week away. So you saw this huge skyrocketing price. Now, if you sold up here, you did really, really well. And then you can, again, see that J-curve coming into play here with the belief that all this stuff is going to launch in January as well. Now, this has a tendency to annoy investors because the typical J-curve applies for pretty much every crypto out there. Unless it launches with utility, sometimes you can avoid the typical J-curve, but you're still going to have that drop after the initial excitement wears off. And most cryptos don't launch with utility. But this is the interesting J-curve just because it shows you what can happen if you sell. If you'd been back here and you sold, you were probably kicking yourself when this happened. And then you sold on the way down here because you expected it to level off. And hopefully if you bought here, it went right back up here. But we're back at that trough right here where we're waiting for the utilities to launch. Now, what's going to happen on the other side of this? That's the question you have to answer. You have to decide when is the best time to buy back in if you sold over here. So for Evergrow coin specifically, is the other side of this going to be here? Or is it going to be off the charts? Because remember, look at this is where we're at right now with Evergrow coin and with a lot of other projects. This applies to most of the projects that launched in 2021. Just about every one of them is just now starting to launch utility. We're only now starting to see actual utility come out for a lot of these projects. So for those projects, are we on the way to here and kind of blowing this out of the water? That's kind of the question you have to balance right now is now the time to get back into the project if you sold out? Or if you're in these projects, is now the time to buy more of those cryptos, expecting it to try to get up to here? So let's summarize the two primary investment strategies we have for the crypto J-curve. You can do as the chart here says, and this works best if you come upon a crypto at this point. It's already been launched. It's already been a while. You can see it's clearly in this drop here while you're waiting for utility. Then you just got to gauge when is the best time to get into this, because there's going to be some fluctuation when you're looking at the chart where it's still going to go up and down. But when you look at it big picture, it's going to look like a flat line. This is why I said sometimes the technicals really don't matter that much because you're talking about very, very small differences. But to each their own. If you want to use the technicals, that can work also. But again, it's going to fluctuate up and down. This area down here is going to look like this all over the place between prices over time as you're living through it. That's what it's going to look like. And if you zoom in on any of those charts I showed you, that's what it's going to look like. So if you find a crypto and they've already launched, they've already had the excitement, and it's clearly here, then it's just a matter of figuring out where in this J curve you want to buy. Because the ideal moment, if you want to get the lowest possible price, is at the rock bottom here. But it's not always easy to find that area. So you have to kind of find out what's going on with the project, where they are, what is their projection for actually launching utility, what kind of utility is it? Is it something brand new that the entire crypto space has never seen before? Or is it something that's an improvement on something else? So you kind of have to gauge that, because you're not necessarily going to see a huge increase for utility that's already out in the crypto space. You might see this kind of an increase on utility that's never been done before in the crypto space. But for the most part, everything else is just an improvement on something. Depending on what kind of an improvement it is, you might not see this kind of an increase. Or the second strategy is you're on the pre-sale, you're in the private sale, assuming that there's not a vesting period. And most of the time, people really, really dislike investors that do this. But if you sell when you think it gets to here, you'll maximize your return on your investment initially while you wait for this point to buy back into the project. So those are the two strategies. Now, if it's a project that you really, really like, selling everything that you've got here, especially if you're a pre-sale person or a private sale, you might actually destroy the project doing that. So that's the caveat with this approach. I don't ever recommend anybody sell everything they've got in a project, because you could kill the project. And if it's something you actually believed in, you'd be essentially killing it, especially if there's more people doing this strategy. It's going to look like a significant drop. And you see that on some project launches. That's generally the people that just don't care about anything other than their money. If all that matters to you is profits, this is an effective strategy for you. Again, with the caveat that sometimes you don't know where this point's going to be and what's going to happen with the future, as you just saw with the Evergrow coin chart. But those are the two strategies, and those are some of the considerations for both of those strategies. Hopefully you found this content helpful. Let me know in the comments. Do you use the J curve for your investment strategy? I'm curious to hear your comments. Or do you use a different strategy entirely? Until next time, stay strong with those dominant hands.